Good day, guys. You're welcome to the episode one of the Forex mentorship. So we'll be talking about what is Forex. So Forex simply means foreign exchange. That means a market which is global and also decentralized, where currency change hands from one holder to another. So the FX market is the largest market in the world, and a tiny percentage of the currency transaction happen in real economy involving international trade. So but most of the main transaction happen when people buy and sell currencies in order to make fraction profit from the movement. So the exchange market are bought and sold for speculative reasons. Speculative reasons in the sense that if people believe that dollar will go up, they will buy the USD, and if people believe that the euro will go down, they will sell the euro in order for them to make profit from such speculations. So what is the forex market? Just as we said previously, the forex market is where currency are being traded. Just like every other market has what they trade here, in the forex market we trade currency, and is an international market and also is the largest market. All countries participate in the forex market. So how does the forex market work? The FX market is only truly continuous and non-stop market trading market in the world, meaning that the market doesn't actually close despite you might not be able to trade during weekend, but the market is still in move. So it's always in motion. So it's a market that never closes because the economies are usually open. So it becomes more retail oriented in recent years that traders and investors of all sizes can participate. It was actually built for big traders. Trades the forex market. The forex market is traded by investors, big hedge funds, and also other firms, and also the retail traders like you and I also participate in the market. So there are a lot of opportunities to capitalize on the financial market. Both commercial and investor banks they still conduct most of the trading in the forex market. So the question of what is traded in the forex market? Simple, money. Why? Because money is currency, and currency is traded in the financial market, which simply means foreign exchange. That is forex. So we simply trade money in the financial market. Now in the stock market, we trade shares, and in the index market, we trade indices. While in the forex market, we trade money, which is just currency. And also in commodity, you might trade things like gold and silver and the rest. So currencies. What is currency? Currency is just simply a representation of the performance of an economy. So we have different types of currencies. We have the USD, which is popularly known. We have the Euro, we have the JPY, the GDP, and we also have the CHF. These are known as major currencies because these are the top world economy that are performing well. Then we also have AD, we have NZD, CAD. These are currencies that are also not performing that well, but they are top economies. So we call them the minor, which will go into that. So there are different types of currencies, and these are the few out of the many. So if you notice on our screen here, we have a currency here, which is NZD. For example, NZ means New Zealand and D symbolizes dollar. So it talks about the New Zealand dollar. So we can see the breakdown of what we said. NZ stands for New Zealand, while D stands for dollar. So easy enough, right? This currency includes in the chart below are called the major currency and the most widely traded currency. So all these currencies are the big economies in the world, like Japanese, we have the AED, we have the Euro, the GDP, we have the CAD, we have the USD, and we have the CHF, which is the Swiss franc. So buying and selling of pairs. So forex trading is simultaneously buying one currency and selling another currency. Currency are traded through the forex broker or the CDF provider. Now the forex broker or the CDF provider is like an agent that link you to the market for you to assess the raw price of an asset. And these are traded in pairs. Currencies are quoted in relation to another currency. For example, we have the euro against the USD, which is euro slash USD. When you trade in the forex market, you will buy or sell in currency pairs. Imagine each currency constantly in a tug war with one currency on the other side of the rope. So it's just like this. Two currencies are always fighting. The one that win will determine the direction of the market. It's just like example in Nigeria we have USD NGN. USD NGN is always fighting. The ones that win will determine the direction. So as an exchange rate is the relative price of two pairs from two different countries. Exchange rate reflect based on which currency is stronger at the moment. Okay guys, so in this section we're talking about base and quote. Now the base and quote is a summary of how the market move. The currencies are being put in base and quote. For example, we have GDP slash USD. The GDP is the base currency and the USD is the quote currency. So let's go to the chart and see how it's being illustrated. So guys, the base and the quote. The base currency is like the floor and the quote is like the building on top it. So if the base currency, let's say for example we have GDP against the USD, so the base is the GDP. So the first currency is the base, which is GDP. We have slash USD. The GDP is the base. The base is usually the first currency in a pair. So a pair means two currencies together. So here this is the base and here is the quote. So here is the quote and here is the base. So if the base, which is the floor, is stronger than the quote, that means the market will go up. If the base is stronger than the quote, the market will go higher. Let's write it down. So if the base is stronger than the quote, the market will go up. And if the quote is stronger than the base, that is if USD is stronger than GDP, the market will go down. So this is just a description of how the market moves. It's a short summary of how the market moves. If the base is stronger than the quote, the market will be going up. And if the quote is stronger than the base, that means the building is stronger than the floor. That means it will collapse. The market will collapse, start moving downward. So the market will move downward. So this is a summary of how the base and the quote currency work. If the base is stronger, the market will go up, and if the quote is stronger, the market will go down. So this is another illustration of it. So if the quote is stronger, the market is going down, and if the base, which is the floor, is stronger, the market is expected to go up. So this is a summary of how the forex market move in line with the base and the quote currency.